What's happening, guys? Welcome back to another Monday night scan. We had the long weekend because of President's Day, so the market was closed on Monday. And so we are going to be looking for a short week ahead, which should be pretty fun and action packed. We're going to bring on Dawson onto Scan to share some of his market watches and his thoughts. And I'm actually going to see him in person this upcoming week in New Hampshire, along with a bunch of other guys like Nate, Stan, Alex Be the Story, Jack Kellogg. They're all going to be there for a pop-up event for Traders for a Cause in Salem, New Hampshire. So that is on the 20th, which is a Thursday of this upcoming week. And so if you're in the area, there are tickets available, and I highly encourage you to attend. It should be a lot of fun. We'll see what happens with the weather. It's supposed to be some pretty crazy snowstorms happening, but I think it's going to be a great event, and a lot of good traders will be there to connect with and members of the community. So definitely check that out if you're able to. We're going to talk about a couple of things in the market, the state of small caps right now, some of the themes and watches that we've been paying attention to, and we'll chat about all that and more. But before we get into that, also check out a couple things on the Investors Underground YouTube channel. We've had some fantastic interviews recently. Last week, we had Jason Shapiro and Anthony did a fantastic interview with him. They talked about a lot of things related to managing a fund, managing your own psychology, fading the crowd, focusing on positioning and trading, and where long-term edge comes from someone who's been trading for decades at a very high level. So definitely check out that Trader's Journey episode. And then this week we had Trading Composure, which is a very large account on X or Twitter that talks about so many wonderful things with trading that hold people back. So like revenge trading, letting your psychology spiral out of control. He just touches on so many different topics. So Sam did a Trading Takes interview with him that you can find on the Investors Underground YouTube channel. So as always, like, subscribe, share those videos, and they are essential for growing as a trader, to hear the perspective of people who have done this successfully for a very long time and have a lot of great insight. So let's go chat with Dawson now. We'll bring him on and we'll get right into Scan. All right, we're happy to have Dawson back on Sunday Scan. Well, Monday Scan, because the market is closed on Monday. So Dawson, how have you been? Welcome back to Scan.
Good. Happy to be back. To be honest, I didn't really trade that well last week, but I was having some newbie mistakes coming back into my trading, with letting winners run and cutting winners too quickly, and then fighting a few names as they continue to go higher, because we had a bunch of days, overall markets and stuff started going nuts, and it was like larger caps were going crazy, funneling into the smaller cap names, but the overall markets weren't really budging a whole lot. So I was kind of carrying a bit of a bias. Yeah, I wrapped up the end of the week going pretty well into the weekend. So nothing too crazy, but yeah, trying to get those things back under control.
Yeah, for sure. And I feel like the market had somewhat of a shift over the last week too, because we saw a change in the action, not just over the last week, but over the last couple of weeks, where you had these small cap names with just a ton of volume and kind of odd action, a lot of trappy action, and then sometimes they would look like they were going to like trigger and squeeze, and then they would just like stall. And so like names like AIFF, I think it was like a great example of a lot of false moves both ways. But if you kind of look out over like a 5-day or 10-day time frame, it was in a pretty steady channel, but it always looked like it was going to make a big move, and then it would kind of just like hesitate and then and go back down. So definitely some different action in that space. And like, what are some of the names, or what are some of the themes that you've been seeing in the markets over the last couple of weeks that you're kind of tuned into right now?
Yeah, for the most part, like if I don't have a main sector where you get like quantum names and that sort of thing, that I'm starting to look at price ranges and daily chart patterns that are working in that moment. Small caps are fairly cyclical. So whatever is working, they come and go, certain patterns and stuff. So what's been going right now for probably the last month or so is gap and craps have been, I don't want to say easy money, but they've been setting their highs right near the open, and have been closing near their lows fairly consistently, with a pretty high win rate. So I'm not typically one to short those day one gappers, but when they're failing and you get all that volume rush in off the open and everybody's bagged, 9:45, 10 a.m. plus, pops are getting sold and the best ones never bounce. So those have been failing pretty good. And then we've had like an influx in volume into some small caps that have resulted in multi-day runners. So like these small caps are typically top left to bottom right charts, or they're fizzling down near lows for long periods of time. And those it takes one day where they'll put out a PR and they'll gap. And for the most part, 80% of the time, those things will retrace right back to where they came from. But that one day that they start to catch trend, we've been having them go for 1 day, 2 days, sometimes 3 days with stuff like AIF, stuff like TIVIC, TIVC. We had MGOL, MGOL. So we had some nice multi-day runners. And as long as I'm picking my spots, in like those secondary leg breakouts, those overextension trades. So kind of using like those day-to-day grind as from those gappers as like income trades, basically until they stop working and you get that black swan that starts to trap people, get shorts comfortable and then catches them off guard. So those have been like the income trades. And then going to those multi-day runners with like A grade setups for me when stuff goes on multi-day runs, and kind of upping risk with a little bit of house's money from some other trades and being able to sink my teeth into those ones.
Yeah, and those multi-day runners that get trappy, those are the ones that I really like to focus on the long side. I look for something with a ton of volume, something that looks like it's breaking down and it gets saved, looks like it's going to break down, get saved, and then eventually gets up to some kind of trigger point and goes. But I think it's worth mentioning, for some of these patterns, they might look the same on the chart. So like the 2D might look the same, but the 3D, the structure behind them is different. And so like Dawson was saying, when you have these gappers and you have a ton of volume, you might have, 50 million volume, 100 million volume, pretty close to the open. You have to think about, okay, if there's that much volume, then there's clearly a demand side and then there's a supply side to that. And those can look different. So for instance, you might have a pump room that is, generating that demand. And then you might have like an ATM from the company that's like that supply. And so you might have 100 million volume, but you have the company selling shares and you have a pump room kind of, supplying that demand. And if it just churns and then fails, you can have that huge flush down. And that's much different than like, a good press release or like more natural demand coming into a stock. And, the supply might be coming from short sellers. And so you could still have that 100 million volume churn, but you have the supply demand dynamics are very different. And that's much better for an eventual squeeze. Because if you have natural demand and the supply runs out from the shorts, and then you basically get to a trigger point, all that supply then turns into demand from shorts covering, and so you have like double demand. So I think it's just worth mentioning that if you think about these layers of supply and demand, where is it coming from? If you can estimate or get like a read on that, I think you can have a much better edge than just looking at the chart and not thinking about, where is that coming from at all. And of course, you never know exactly, but I think having some kind of thesis with that, at least it helps me to differentiate which are the names that have potential to squeeze and which are the names that have potential to just kind of, fail to follow through and flush down. So, and I think that kind of understanding that difference would have helped a lot over the last week.
Yep, I think you're bang on there. We should put that double demand on a T-shirt. I like the way that sounds.
That's right. And so before we get into the main watches and everything, also Dawson and I are going to be in New Hampshire this upcoming week with a bunch of traders there. Nate, obviously, Jack Kellogg, a bunch of the IU guys. We have Stan and Ariel and everyone else are going to be down there for a regional Traders for a Cause pop-up event in New Hampshire. So we're looking forward to seeing everyone there, and we'll have the information from that on the screen or in the link in this description if we don't get snowed out, because it's supposed to be some brutal snowstorms and everything happening around that area. So that's something that I'm really looking forward to, and I'm looking forward to hanging out with you, Dawson, and everyone. So we should have an exciting week coming up. And again, the market is closed on Monday. So a short week, but it should be a pretty good week overall. So I will give the disclaimer that neither Dawson nor I are financial advisors, and these are not buy or sell recommendations. Everything we talk about is for informational and educational purposes only. So Dawson, what do you have on watch for the week ahead?
Yeah, let's start off here with MBRX. There we go. Get to the right chart here. So we've got another one of these multi-day runners, exactly what we're going over, where you get these big top left to bottom right charts, and then volume starts to churn. It starts catching people off guard. It was a halty mess on day one, so nothing I was super interested in. Past reactive trades where you get those parabolics and sitbacks. But when you get those sub 75-cent close and they're gapping up, the halt bands are super close. So drawing some lines looking left off of day one VWAP, closing VWAP, and some volume profile level here at 2 to 220. And we got an inside day here, but all the volume came in and rushed off the open and got slammed right back down and consolidating right around these day one volume profile levels as well. So with day one VWAP and day two's support level in the 180s, I'm going to be looking for a breakdown trade here. You can see the wicks on the opposite side from what we typically talk about when we're looking for names to get bought up. These ones are getting sold off on pops. So if 180s can start to fail to follow through, if we get a pull under it and then pops towards it, start to retest and fail and have trouble to get over it, I like that for a fade lower. They do have some warrants in the $1 range, so they could be looking to use those. And then expecting to close fairly soon is like 11 million at like 75 cents. Those exercise prices got adjusted. So it's got fundamentals to pull it down, some paper to sell, and just looking for the technicals to confirm that thesis. AIFF, name we just recently went over here. But another one of those multi-day runners starts breaking out. You can see it has a history of gap up and fail, gap up and fail. And then that one day that it starts to build trend and start to break over those levels, that's when we start to go on those multi-day runs. So that's the day that starts to catch shorts off guard when they're looking for those morning strength to fail and give back its range. But now we go on 1, 2, 3 days of move, respects its green to red levels, doesn't break them, doesn't break them, doesn't break them. It sets its opening range lows at 9:30 off the open and then continues its trend. And then the last few days, if we're looking at the open here, sets its open, fails, double top retests, and fade right back to lows. And if you look at this day here, one pop right there off the opening candle, pops versus VWAP fail, one last exhaust, and then fades off near its lows. So on the daily, it's respected its green to red levels on the front side, respected on the back side. So kind of the life cycle of these small caps is they pop and fail until shorts get comfy. Then they go on these runs. You get those mean revert pullbacks. And then once shorts are done with that fade, you get that little relief rally on the backside. So that's what I'll be looking for on this. I'll be looking left. I like that this lines up with a little sub 8 exhaustion. So if I can get a gap down to 8, maybe 780s flush, and then use that opening range highs as a trigger for a trend shift on something like this, possible backside bounce setting up there. Omega, this one was running off the back of MGOL, and same kind of thing. Massive failure on this daily chart, but volume starts to churn right near lows. This does have some fundamental risk with the bankruptcy stuff on the back end. I typically leave that to news guys. I'm not the best fundamental trader. So just keeping that in the back of my mind, that you don't want to run into something like SERV where you get a nice daily chart and just gets hammered. So just keeping that in mind. It doesn't have as much meat if it does gap down. But we got a little liquidity trap type setup here if this starts to build back up through those 20s. Nice perk off the lows in these mid-teens. And if it can start to build through 26, I think we could get a nice trade off of that one. Tivik, same kind of idea as AIF, recent multi-day runner. Big history on the daily of pop and drop, pop and drop. But you can see here on the backside, they do have these little relief bounces, relief bounces, relief bounces. So enough range on this. It's up from 20 cents up to 90 cents. Big enough move on the front side. Typically, I like around $7-8 million volume to continue to trade on these for me to keep them on radar. So we're coming back into these prior volume profile levels here, day one support, and range back up to these 80s. So same kind of thing as AIF, would look for weak opens that start to stabilize and possible relief rally on the backside of that daily chart. And I'm a bit more proactive in my sells on these because I am bouncing it back into bag holders. So it's just sort of a bang bang in and out type trade. It's not a trying to dip by a bottom for new daily highs or something. It's a dip buy for a 20%, 30% bounce back into prior resistance. And then HIMS, a little different for me. But when range comes into large caps, I continue to watch those as well. We had TEM starting to speed up. We had Intel, nice pullback on that first red day. So HIMS is a multi-day runner, same kind of thing I look for on small caps, up from 40 to 60 plus. Volume and range starting to speed up respectively the last couple days. And a big sideways day. So what's been working on small caps is they've been putting in these sideways days up near the highs before the big range comes on those pullbacks. So a little indecision day and then gap down and fade. Same kind of thing with MGOL, big gap up and fade. So something like HIMS, we might be able to put a sideways day in. And each day that this one is running, its opening range lows at 930, 931, right off the open have been the low a day for the rest of the day. So if we look back here, opening range lows, look back here, opening range, wrong bar, opening range lows right in here. So the last few days of this run, that's definitely a trigger. I'm looking for a trend shift. I do see this as overbought. RSI is up near a 90. So it's definitely at overbought levels, price and volume wise. But I'm looking at some sort of trigger that can tell me that this is the day. I don't just want to be fighting this the higher and higher it goes, forcing a bias. But if this thing starts to pull and hold red, if opening range lows start to get taken out and we start getting pops versus VWAP start to fizzle throughout the day, I think we could get a nice pullback in first red day on something like that too. So I'll keep that one on watch, and I think that's about it.
Great. Yeah, a lot of good commentary there, a lot of good watches. And I like what you said about, looking at the time for the opening day, range, because if you have different stocks, we kind of break down like timeframes into different sections. So you have like the first, maybe 15, 20 minutes of the open, and then you kind of have like that 10 a.m. to 11 a.m. Period. Then you have like the midday consolidation. Then you have like power hour, and you have all these different time, zones and time frames. And a lot of times with stocks, they'll have the same players that are doing, relatively the same thing day after day. And so if you have like a fund, buying something up, a lot of times they're going to stick to relatively similar time schedules. So if you have something that, every day at 9:35, it gets bought up, you'll tend to see that be fairly consistent. Not all the time, but that is something that if you notice a pattern of every day this flushes down, it's kind of like, Tesla has a history of like, either gapping up or flushing down, then like immediately having like a sharp reversal. Like you have these personalities of these stocks, and it's usually because the same players or the same factors are doing the same thing. Maybe it's a very options driven name, and like right off the open, they sell all the puts or sell all the calls, and then kind of restart the cycle. So it's just something I think is worth paying attention to. But a lot of great watches in there, and I will pull up my watches now. So the first one is this SERV. So this reminded me a lot of when the quantum names had, NVIDIA's CEO basically say that quantum is, 20, 30 years away from being super effective and everything like that. So that was like a key driving variable that caused a giant waterfall in the quantum names. And you had a very similar thing happen with SCRV. So, robotics name. And NVIDIA disclosed that they basically had a position in it, but then they got rid of it. And a couple of names like this one and SOUM, same exact thing. Once they disclosed that NVIDIA was out of those stocks, then they gapped down. So it's good to just recognize, whether these are with themes or with other things, try to identify what would be the key driving variable to really, cause a large move. And that's how you can catch some of these, waterfall moves on the way down. This happened in pre-market. So if someone's a short seller and if they were around, it's possible they could have caught some of that, but it's just good to keep on your radar for that. But SERV for the upcoming week, I'm going to be watching for a bounce. Usually, what I like to see is after a giant gap down. A lot of times it's big players in a stock like that all have to unwind positions. So you might have had funds that have millions of shares or millions of dollars worth of it. They have options positioning and everything. And it's like once they get a key driving piece of news that kills their thesis for the time being, that all has to get unwound. And that's how you can get those 30-40% down days with something like that. So I'm looking for, after the initial unwind, which we saw that on Friday. Now I'm looking for it to get more and more bearish positioning. So now people are like, this thing is done. They pile into puts, they start shorting and everything, and the lower it goes, the more bearish it gets. That's when a bounce becomes prime. It's not being early, because you don't want to be trying to bounce trade it while it's still the big players are unwinding their positions. You want to wait for that unwind and then wait for the bearish positioning to come in, and then for it to stop going down while people are at max bearish positioning, and then you can look for a bounce. And so I'll be looking at key levels, drawing lines around these areas, and then I'll just be watching for the action to look like there's a lot of shorts in there. Look for it to stop going down, and then if you can have a tight risk and you can basically have a theory that it should bounce, then you can have a try with a good risk to reward. But the lower it goes, the more bearish it gets, the better the bounce will eventually be. SOUN, similar kind of thoughts, but you can see that this one is much more weak than SERV. SERV is still with the robotics theme, so if that theme is still in play, then that can be another boost for demand to it. But SOUN, it's not really in that same kind of theme. It has its own theme, but you can see this chart is pretty broken. So if it does bounce, maybe it'll retest some of these levels and then fail again. But I'll kind of have a relative strength, relative weakness, bias on for those two names. TSM, they had news, so kind of conflicting news on Friday. The first piece of news was that they might be working with Intel to basically, have TSM like operate Intel's U.S. facilities for like making chips. And then you had another piece of news saying that, well, maybe that won't be allowed under the Trump administration. So you have some conflicting news. But if TSM starts partnering with U.S. Companies, that is a big, positive piece of news, because so much of the worry with a name like this is like tariffs, or what if there's geopolitical stuff going on. So if you have this in good standing with the U.S., then that can fix a lot of their problems, and their earnings and everything else are still fantastic. So if the news is true, then I think you could have a nice leg up over the next week. But if you have a piece of news come out where it's like Trump or someone is like, no, we don't want this to happen, or we're going to change it up, then you could have some downside. And for downside, I would be looking for IMTC, because they need the money from TSM. And if that deal doesn't go through, then they would probably have a big mean reversion trade back down. So again, looking left, looking at these kind of key levels, you could use that as a guide to see if it bounces off of them and then, flushes down. So those two names will be on watch. And then Apple, they have an event, I believe, on the 19th. I'll have to verify that, but they're going to be releasing some kind of new product. Might be a new iPhone version or something like that. But everyone's speculating that Apple is going to be getting more into robotics and things. So the robotics names will also be on watch with that. But the Apple event is usually something that moves small caps on news. And then a lot of times it'll either, cause continuation in Apple, or it can cause a big, flush if the product is like super lame or just not what people were expecting. So Apple will be on watch for two plans. And then Palantir. So we're coming up to, this is the monthly options expiration week that we're going into. And so names that are parabolic into that, or names that are really sold off that have option activity, I usually look for mean reversion trades around that time of the week or month. And so if we get a nice run up, maybe into the 130s or so, into Thursday, Friday, I'll be looking for a flush, maybe back to 120s, 110s, or something like that. So hopefully we get a nice parabolic and then a big flush in that. And then finally, IONQ, this has been on watch for a while, but I think that this is starting to kind of roll over. And then I use the comparison of ARQQ and some of these other ones where IONQ and RGTI are still in this phase. But I think if you look at some of the weaker names, that's kind of where they're headed, as long as there's no major catalyst in the quantum space. So those are kind of the main watches and themes that I have on for the upcoming week. Dawson, any comments, any questions on any of those?
Yeah, I like what you're saying about like those. I'd call them like kind of like episodic pivots basically with SERV and Soon, where you get guys like Stockbee and stuff that are looking for those to the long side where something changes the outlook on the company. The whole reason why Soon started its run was because of the NVIDIA stake. And now that it's no longer there, that changes the outlook on the company. Yes, there will be opportunity. You're looking for a bounce trade. When shorts start to cover and longs get exhausted, there's going to be some sort of mean revert like there is on anything. Everything moves up, moves down, and chooses its new direction. So I do see the bigger picture outlook on these to have changed now. I think the daily chart is at a different point in their phase. But I do like what you were saying there, because it's the same thing as the quantum names. It's happened time and time again where the whole reason the move started has changed, and now the stock price should reflect it. It's up to price to catch up now to what the news is saying. Let shareholders kind of churn their way out there.
Definitely. Yeah. And just like with the quantum names, you had the initial sell-off and then everyone was looking for the bounce trade right away, but they kind of faked bounce and then sold off again and then sold off again. And again, the lower that they go into a major level with bearish positioning increasing and then it stops going down, that's when you can get a really good risk to reward, especially if there's another piece of news as well. So let's say that SERV releases like a press release and they have some kind of deal or partnership. If you have that at the same time while they're at max, bearishness, and after they've had a huge move down, you can get really nice bounces or mean reversions there. So so a lot of good watches on watch for the week ahead. And again, the market is closed on Monday for President's Day. And then Dawson, I will see you in New Hampshire. We have the Traders for a Cause meetup. We're going to see everybody there if the weather permits it. So excited to see you this week. And yeah, we'll be trading together in the room.
That'll be a great group. Look forward to seeing everybody in a couple days.
Yeah, same here. All right. See ya.
See ya.
Thank you everyone for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.